On today's episode of the Cryptoverse, gonna do something a little bit different today. Every morning I screen the news and pick out what I think are the most important stories, and today I'm actually going to just do that in real time and record my thoughts as they arise and as I find the stories. The first one that I found this morning is Facebook is reversing its ban on advertising cryptocurrency projects. So the bottom line about this is that ICOs will still be banned from advertising, can't do that. And if you are a crypto project and you do want to advertise, you have to apply, like fill out an application and then, tell them if you've got any licenses. I suppose that's for an exchange, if your cryptocurrency is publicly traded and so on. I like this news because right before the ban, I was on the cusp of beginning a Facebook advertising campaign for my online cryptocurrency courses. So that doesn't apply to me. I don't have a publicly traded cryptocurrency. I don't need a license. So I'll still have to fill out an application, but it should just go straight through. The only other obstacle I have to overcome is the fact that not only did Facebook ban the advertising cryptocurrency projects, I also got my Stripe account banned for selling information about cryptocurrency. So I'm fixing those two problems. Facebook is back. Now I can resume the advertising that I was going to in the first place. Here's another story. MetaMask is to add Ethereum Classic support soon. So according to Ethereum Classic director Anthony Lusardi, the popular Ethereum-focused Google Chrome browser plugin will soon support ETC. So I'm sure you're already familiar with MetaMask. I recommend it all the time. It's a browser plugin. Not only is it a wallet, but it also allows your Google Chrome browser to talk to Ethereum-based applications. So it kind of allows your web browser to browse the Ethereum network. And up until now, it's been entirely Ethereum ETH focused. Well, with Ethereum Classic being added to Coinbase soon, well, it makes sense that MetaMask would add Ethereum Classic support. The only thing I would say about this is that I can imagine some user confusion appearing when they, for the average novice who doesn't understand the difference between ETC and ETH, they're both called Ethereum. That's going to require some support tickets for MetaMask, no doubt, to explain what the difference is. They can obviously forestall that by doing a My Ether Wallet style pop-up when you first open the app, and it can explain what the difference is and warn you not to send Ethereum to an Ethereum Classic address or vice versa. Next up, the Lightning Network seems to be at an interesting stage of its development. It's growing exponentially as a network. And because it uses payment channels, it has a liquidity system. Because you open a channel with me, you lock up a certain amount of Bitcoin, and then that's the payment channel that allows the debt basically to move backwards and forwards between me and you. And we can then relay payments on behalf of other people who we don't know. But the route through the network gets from person A to person B, and it may come through you and me and several other payment channels as long as there is sufficient liquidity. So the Lightning Network has been up 5 months, apparently, according to this Reddit post. And the number of routes has increased 10 times, but the probability of successfully routing did not increase at all. So I was just listening to or watching a video from Ryan X. Charles talk about how Lightning looks like right now to be ideal for small payments, like, a couple of dollars, $5, etc. But the bigger the payment you intend to make, as you get closer and closer to $100, the probability of that payment being successful decreases because you and I don't want to lock up a huge amount of Bitcoin in the payment channel. So if we only have a $10 payment channel and someone wants to route a payment through us for $50, well, they can't. It can't come through us because our channel just doesn't have enough Bitcoin in it, collateralized, to route that payment. So it has to find a route where there is $50 worth of liquidity. And then if someone wants to send it back through that channel, that's fine because it resets the balance the other way to the other end of the channel. But so where Lightning seems to be right now is that if you want to do a large payment, say for $1,000, $10,000, or $1 million, well, you may as well just do it on chain because the fees on the Bitcoin network right now are reasonable. If you're going to make a $1,000 or a $10,000 transaction, you don't need the Lightning Network. You just send it, pay a normal transaction fee. But if you want to do a micropayment, well, then lots of micropayments, then use the Lightning Network, right? Because there's much more chance of you making a 10 Satoshi payment through Lightning. Almost every channel is going to be able to handle that versus larger payments like $1,000 or $10,000. So that's where Lightning Network seems to be right now. So pretty sweet. And just to balance out the video with a bit of Bitcoin Cash news, Pairs.io, that website where you can buy stuff from Amazon using Bitcoin, they tweeted out this morning yesterday at 7:40 p.m. UK time, saying they're in the final stages for testing Pairs version 4. Engines are operational. Are you ready? So this is where they're going to launch native support for Bitcoin Cash payments on Pairs. Forever, Pairs have been allowing you to spend any crypto on Amazon by going through Pairs and then using the Shapeshift integration to convert your money into Bitcoin, essentially. But that means that Pairs was only ever natively supporting BTC. And when the network gets super busy, that just cripples their business as a whole, because users are just paying massive fees and whatever discount they get on Amazon is being gobbled up by that. So Pairs have been working on launching Bitcoin Cash support. This version 4 of Pairs, which is launching any minute now, supports Bitcoin Cash, so that if the Bitcoin network does get super jammed once again, there's a backup in terms of another native currency, being Bitcoin Cash, supported natively on the platform. In other news, Cliff High from halfpasthuman.com has a new Alter report out this morning. I'm seriously reluctant to buy this one. I've bought the last few, and what the reports predicted just didn't come to pass. So it's difficult for me to then continue to invest in something that has proved to be inaccurate historically, but there's also a big part of me that really wants to know what's in there. 31 pages of the report's called Jump Out, forecasts for July to October 2018, and it's one of these asymmetric linguistic trends analysis of internet. It's the web bot that scrapes all of the conversations online. So this is Bare Naked Wealth number 11, and it tends to have a lot of cryptocurrency content to it. So for, I think they're $99, these reports, which is about 65 pounds. It may be worth it to me as a sort of journalist, commentator, so on, to get it for the benefit of, my members, subscribers, and all the rest of it. So on that basis, I might actually get it. They don't actually have a money back guarantee, so it's, you buy it, that's the end of it. So if you want to check it out for yourself, it's halfpasthuman.com, as in like time, as in 1:30 in the afternoon, but it's halfpasthuman.com. Bare Naked Wealth Report number 11 on Cliff High's website. Next, I need to report something, or actually correct something that I reported incorrectly. In my video, where I did an analysis of the EOS block producers, the arbitration forum, and then freezing accounts and so on, I said the first arbitration case where 7 accounts were frozen, I said that was because the 21 block producers took action to freeze the accounts before the arbitration forum had come to a decision. That wasn't accurate. Thanks to EOS New York, who clarified this, what happened was the arbitration forum was looking at the case, and they did rule. They ruled that they didn't have jurisdiction and couldn't rule on the cases. So that left the block producers to decide for themselves, and via unanimous 21 out of 21 votes, they decided to freeze the 7 accounts in question because they were going to get robbed by some attackers who had stolen the private keys. And once they'd done that, the block producers went back to the arbitration forum and said, this is what we've done, can you rule on that please? And then the arbitration forum looked at it and said, actually, yes, we would have, in that case, we rule that was the right thing to do. So it's a technicality. The outcome was the same. The block producers did agree with the arbitration forum. The 7 accounts were compromised, and the owners of those accounts would have lost money, through a robbery if they hadn't have requested help from the arbitrators and from the block producers, which is the process. So it's not like, it's a voluntary system, and it's by request. So it's not like the block producers in the arbitration forum just go around the EOS community looking for things to arbitrate upon and exercise their superpowers. You have to apply to arbitration and pay a fee and go through a verification process and submit all of your information and so on. So it's not an easy thing to do. So that's just dispelling a bit of a myth there about how the arbitration system actually works. I just wanted to correct that thing, that the way I reported it was the arbitrators were taking too long to decide, and that's why the block producers had to jump the gun and make a decision. Turns out it didn't quite happen like that. The block producers were left with the decision because the arbitrators said they could not rule. So that's my morning roundup for today. I've got other content lined up for you, more structured videos, but that's all I've got for you for this video. So if you liked it, hit the like button. If you want to leave me some feedback, leave it down below. And if you want to get notified of my future videos when I post them, well, get subscribed and hit the bell so you get notifications through the YouTube app. Also on steemit.com, if you want me to reply to your messages and comments, I'm much more likely to reply on there because it tends to be more positive, quite frankly. And also I can tip you for a good comment. I can just click the button, upvote your comments, and then tip you in Steem, which I do each and every day. That's where most of my voting power goes, to my own followers who leave good comments on my content, and I actually tip them. And that's anywhere from 50 cents to $1.50. And also, if you think I know what I'm talking about, then you might want to take one of my structured online courses at cryptovesti.com. If you want to learn the ins and outs of how blockchain technology works, check out the Digital Money Revolution course. If you want to learn how to make and save money with Bitcoin, check out the Secrets of the Bitcoin Triangle course. And if you want to learn how to trade cryptocurrencies, do technical analysis, and learn a trading system, check out the Master Cryptocurrency Trader course, which has got a special offer on for the first 50 people that sign up. But other than that, guys, that is all for this episode. I'll be back with the next episode of the CryptoVest. So until then, it's me, Chris Coney, saying bye for now.